Hey, welcome to our home buyer seminar. We do this every Wednesday at 4 o'clock, sometimes 5 o'clock, sometimes later. We're busy. We're out in the business doing real business. I'm Bill Gross, out Bill Gross Probate and social media, and my good friend and colleague,
Yes, Patricia Castillo.
Patricia Castillo, for the rest of us who can't roll our R's or L's like she can. And hey, we get together every Wednesday, talk about buying either your first home, much time, or your next home. We also bring with us our good friend, Shannon, the lender.
How's
What's
it
up,
going, guys?
Shannon?
How's it going?
I think we should change the name to Shannon the Lender. Would that be more like,
We
like
can
hip,
do it.
more
Remix.
current, more
More
for the
hip.
I
young,
love it.
more hip, more like a little more street cred currency?
I love it. I love it.
And Shannon is a lender, if you can't tell by his nomenclature, by his nomenclature, whatever. Anyhow, so busy day in the market. How are we doing, Patricia? What's going on? What do you see happening right now? Hey, by the way, if you're watching this live streaming on YouTube, Facebook, LinkedIn, Twitch, X, put your comments in. We'll watch them in real time, respond to them. If you're in the recording, we'll catch up with you afterwards. Patricia, what's going on?
Well, Bill, I'm seeing that buyer demand is still high and prices are staying the same. I haven't really seen, too much going on there in terms of price reductions. And when the homes are priced right at market value, I'm seeing them go into escrow, within the first week, 10 days. The prices are not really coming down like people thought they were. And in fact, I'm talking to a buyer right now that they were considering waiting. And I said, wait for what? You're going to pay at least 4% more next year for the same house. And so, we're out looking right now for properties. And they're first time buyers too. So I can understand, first time buyers are very cautious and they're wanting to time the market. But right now, if it makes sense for you to buy a house and you can afford the monthly payment, then this is the time for you to jump in and pull the trigger.
Do prices look like they're going to be going down anytime soon here in the Los Angeles market?
I don't see that. I don't see that. And even when rates were at 8%, people were getting into escrow and we were closing deals. So it's all about finding the property that's going to work for the buyer. And even if the floor plan isn't quite functional, maybe they want a 4-bedroom instead of a 3-bedroom, but that's something that you can always, work with. You can maybe add a wall and divide a room or add on to the home later on in the future. And so once you have the home, that's really the beauty of it all, is then you can have the freedom to customize it.
It just seems like it's a train that's moving, whether fast or slow. And if you don't jump on now, it's just going to get further away. It doesn't look to me like anything's slowing down. Shannon, what do you see? You're at the front end of it where people are getting ready to buy a house. Is that demand slowing? Is that demand staying about the same? What do you see going on?
No, I mean, honestly, same thing with Patricia. I had someone that was going to stay on the sidelines and called me back and said, "Hey, look, we're ready to go. I want to see what I can qualify now." And just because with obviously the Fed saying that they're not going to do as many cuts as we anticipated, I'm telling everyone, hey, just prepare for the worst. Act as if this market that we're in is how we're going to stay. And I think the sentiment that I'm getting, I don't know if you guys are getting it, is everyone's kind of coming to the realization is this is where we're at. This is where we might be staying for the rest of the year. And so I think everyone is just coming to that realization. And, I mean, that's a good thing, right? Everyone's kind of, coming out of that, that dream fantasy land of 2-3%, and we're going to come back to that. We're going to come back to that. And it's like, no, we're here now. This is where we're going to stay. People are, done kind of getting the rate shock, and they're like, hey, let's move forward. And like you said, Bill, if you're not going to go now, it's going to just keep going further and further away. So
In 20, 30 years from now, we're going to go, damn, I wish I jumped in. I have to tell you, I live in a neighborhood. There's 1, 2, 3 houses that we offered on that we didn't get that were bigger and nicer, a stretch at the time. And that difference has only grown. Now, at the time, I didn't think it was prudent. We offered at the time $1,150,000 or something, or another one $1,400,000. At the time, that was like real money. Today, that's just monopoly money. But at the time, that extra 50 or 100 was a lot. And today, those properties, everything's doubled in value, including the house I'm in. So it didn't really matter. Maybe we didn't give up other things we might have, or maybe we made the right choice. I don't know. But the prices went up either way. Like waiting and not getting it didn't make the problem go away. It just continues to grow in some regards.
Yeah. No,
You make it work
100%.
for you or against you. So, and I also think the other thing that's changing is when I grew up, I'm old enough to be both your kids, I guess. I'm pretty sure. Yeah, easily. I'm probably I could be older than your father, Patricia, right? I've seen pictures of him. I look older than he. I have more gray hair, I think, than he does. So my point is, when we grew up, when I bought our first house, everybody could afford their first house.
Mm-hmm.
Everybody could buy a house. If you just had a regular job, if you're married, two of you had a job, save a little bit of money, you could buy a house. That's not the case anymore. Now you got to work hard, put money aside, keep your expenses low, keep your credit good, and you can afford to buy a house if you do all that.
Yeah, I'm actually in escrow on a property close to like Calabasas, Westlake area, and the family is buying it for the kids. And obviously, I deal with the financials, so now I'm knowing even the grandmother is pitching in, along with the parents to buy this house. So it's like the parents and grandma are helping the kids with this house.
Mm-hmm.
Right. So it's two generations helping out the other one. It's taking, and obviously it's the price point is pretty high, right? One of the highest I've done, but everyone's pulling their resources together. And even for them, they're saying, hey, this is it's not a stretch, but it's a tall order to do. And so
It's about getting creative, right, with your financing and seeing how you're going to structure it. The property that I had listed in San Dimas, that one is in escrow right now. And the buyer was originally going to put down like 40%. So she was trying to reduce her loan amount. Now she just decided she was pulling out money from another property she owns from a rental. And so she just said, I'm going to forget the loan and I prefer not to have a monthly mortgage payment. So now she's paying cash. So
nice.
yeah, so there's different things that can happen. And once you're in escrow, you can still work with your lender to see maybe you originally were going to put down 3.5%. But if for some reason you're getting a gift from a family member or a parent or somebody's coming into a larger sum of money where they're going to gift you a portion of that, or maybe they're going to go in on it with you, there's things that can happen where you can still restructure that financing to maybe put more money down and work with the lender to work with Shannon to get that payment reduced.
Yeah, that's exactly what's happening with me. Is they decided what the rate the family is just gonna put more down for them and lower that loan amount. So that's exactly what happened. And sometimes if you do it low enough, the bank will waive the appraisal. So that's a good thing for a lot of homeowners to know, is if you put a significant amount down, depending on how much you put down and depending on the underwriter's discretion, of course, but I've seen appraisal waivers
Right.
as little as 20%, 30%, they'll sometimes waive that appraisal. So yeah, that's something I'm seeing. I'm also seeing, I'm just in the last 7 days, I've had 3 people already reach out for cash out refis. People are needing of money. It's, and even with the rates as they are, I'm getting
Right.
questions on HELOCs. How do I, take out some equity, either pay certain things off, or, another person wants to buy another property. So it just kind of tells me either people need money or they're just, again, they're normalizing these rates right now and then still
Right.
moving forward with what they want to do.
So Shannon, in terms of financing, let's say for a first time buyer right now, what are we looking for today? Because rates are at about 7%. So what are we looking at today for, let's say, an FHA loan, 30-year fixed with 3.5% down?
FHA loan, 35-year fixed. We're still in the high fives, low sixes. So you can still do 5.9 to 6, I think, if with a good FICO score. And then the Cal half
Over 620,
over 720 FICO.
720. Okay, so over 720, you can get an interest rate at under 6%.
Yeah, we can for sure get that. Yeah, as of today's rate. So that's, again, it's dipping down a little bit. It is. It's not. It's no longer going up. obviously with the news last week, it kind of, spiked just a little bit, but now everything is
Mm.
I'm seeing the rates kind of stabilize. I'm not seeing the major jumps as I was seeing before.
Right. Because
Yeah.
not so long ago we were at 7.5 and then came down to 7.25. Now we're in the low sevens. So if you're doing an FHA loan, you can be somewhere in the high fives or low 6%.
Yeah, I mean, no conventional, you're probably at six. The last conventional I did, funded last week was 6.625. So
And what
yeah,
purchase price was that? What was the sales price?
it was
Do you
it
remember?
was it was nice. It was like 500, but it was a condo too. So that one, with condos, they always bump up the rate just a little bit. So
Mhm.
yeah, yeah, it's still pretty good. I mean,
Right.
you
So
could get
6.625,
yeah.
right? For interest rate for a $500,000 purchase price.
hmm
Mhm.
Yeah,
And what was the down on that? 3% or
no, they did put down 20. They did put down 20.
20? Okay.
Yeah, they did put down 20%. That's probably what factored into that rate as well. So, always guys, just a good tip. A lot of people are asking about the rates. It obviously depends on your situation. The two biggest
Right.
things that the rates are that affect your rate, well, three,
Mhm.
but if you're doing a conventional loan, the two biggest things is your FICO score and how much are you putting down, right? Those two things are really gonna factor in. And I'm also seeing I just did one right now. I got someone that's paying $12,000 for the buyer's rate buy down.
Oh,
So yeah, I'm seeing that as well. Sellers are willing to put down. So that's a good point. I mean, me personally, we do the numbers because I always want you to put more into your principal balance because that's your equity. That's money that's not going to go away. You put
right.
it towards your buy down, you're going to save money. Yes, it's just that money is also going to go straight to the bank. It doesn't go to me, it doesn't go to anyone. That's profit for the bank. So
Mhm.
again, my rule of thumb, and I'm curious about what you guys think, but I'm always saying, hey, if you had a chance, let's say 12, 15, 20, if you can still do the payment, I would say let's put it to the principal. But in this situation, it did work out to where they're gonna save a good amount on their interest rate, on their monthly payment. So
Yeah.
that's definitely,
So it makes sense to use it for the buy down if you're going to be there for over maybe 5 years.
yeah. Well, that makes sense.
The
That
Yeah.
makes
way to think about that is, you're betting against the bank. You know your life better than they do. They're assessing you based on average. If
hmm
you know you're less likely to move for whatever reasons, then you can take that risk, and that instead of a bet, you're now you're hedging based on information you have. And of course, people make a mistake and things change, but you can do the best you can. If you know you're likely to stay longer than average, maybe your family's set up there, family business, you're hanging on by a string. Maybe it's not a good bet to put extra money down.
let,
But
let me ask you guys a question. Now on that topic, for first-time home buyers, how many years do you typically see someone stay in their first home?
5 to 7.
5 to 7 years, is that the window?
it
Yes.
used to
Yeah.
be average in America was like 7 years, and that's grown out to 10. In the last 4 or 5 years, that's really lengthened the average time stayed in. As houses became more expensive,
hmm
the demographics changed. Less first-time home buyers, more repeat buyers and trade-ups. But yeah, I think first-time buyers. I think she's right. 5 to 7 is the average for first-time buyers.
Yeah, because I have a client right now that they're debating whether or not they should pull out because they bought a 2 bedroom, 1 bath. Sorry, no, sorry, 3 bedroom, 1 bath, 3 bedroom, 1 bath, and their family is growing. They're having another kid, and they're saying that it's going to be too small.
Right.
So they're debating. Well, we have a 3% interest rate. Do
Mhm.
we take out money and build, on top of this property, or do we buy something else,
Right.
and
Yeah.
that's very serious conversations that they're having because they're like, man, if we go out, we do have a lot of equity, but compared to the rate that we have now, it's night and day. But
Mhm.
if we pull out a home equity line of credit, obviously the rates on home equity line of credits are even higher as well, obviously they're only going to take out maybe 200, maybe to 250. They want to build a second story. That's serious conversations that people are having, is that, hey, should I stay? Should I stay or should I go?
Should I stay or should I go now?
We should write a song like that. Maybe get people interested in the song. What do you think?
Yeah.
So again, you can assess yourself better, and then in the case of like an ADU or a second unit, second floor is different than a second unit. Second unit, when you're done, you can really easily refinance the property because you have more
Yeah.
revenue theoretically. Second floor is a little harder. Maybe you can. You may not get all the money out you put in. Depends on equity and rates and such. But certainly, if you're building a second unit, you're creating more value. Now it becomes investor is a little different type loan for 2 units in a single family. But again, if the value goes up, then your loan to value may go down also. So that's another solution potentially.
Yeah. Another thing I'm seeing too, I got asked for the first time, is the FHA 203K loan.
Why are there not more of those? I don't get that at all. I think as
So-
lenders, that program is so good.
Yeah, I have an agent that is an actual contractor as well. So she has a client that doesn't want to pay all this money, right? She said she's qualified for 850, but all the homes she wants are in the millions. So they're saying, hey, let's explore this option. Now my luckily I have a loan officer in the team that actually has done them, so he's walking me through it. But for anyone who's watching right now, FHA does have a program to where if you see a fixer upper that you like, FHA will help finance some of those rehab costs. So you could buy a fixer upper as a first time home buyer, and as long as they're a licensed contractor that has to sign off on it, you can't have your uncle or someone else to do the work unless he's contracted, or unless he's licensed.
Yeah, you have to be licensed.
Yeah, we have to get a licensed contractor to sign off on the budget, what kind of work that they're going to do, and things like that. But they'll definitely finance it if the after repair market value is pretty much, your loan can be as high as 96.5% of whatever the market after repair market value is on that property. Because on FHA, you only have to put down 3.5%. So whatever that the ARV is, as they say, what is it after repair market value, or whatever the case is.
Repair value.
Yeah, they will loan up to 96.5% of that value to you. So for example, if the value at the end of the day, let's do the math, is $1 million.
965.
Right. Yep.
Mhm.
There you go. And let's say you buy it for 800, 850, you got that 100 over 100, spread to put towards your construction. And what they'll do is they'll, fund the deal, and then they'll put that construction money in a separate escrow account and give that contractor little bits of that money as they go along to the project. So it's a great program. You're right, Bill. No one really is using it, but
No.
I got asked for the first time, hey, do you do these? I made some calls and I said we do. Obviously you have to have one of my lender partners. He's going to be a part of the deal with me, and as of my first one, he's going to walk me through.
That's exciting.
Yeah, it's really good, and it's not as tedious as people think. I mean, there is a separate underwriter that's going to make sure that contractor is not overbidding, right, and just doing something too crazy. But
Right.
again, if you're out there and you say, hey man, can we get a fixer upper, and you qualify for FHA, you could definitely go that route. 100%.
Yeah, there are a lot of properties out there that are would fall into that category, that need repair, that are great for first-time buyers.
Mhm.
And you have to walk the property with a contractor that's licensed, as you mentioned. You get the work order, and you pay the contractor for that time that they spent with you, right? Then you submit that to the lender. And so there's a checks and balances that the lender does too as part of that. They want to make sure that the work is valid on that work order, right? Like you said, they're not overbidding on it. And so they're going to release that money to the contractor in phases as the construction goes along and takes place. But it's a great opportunity for somebody to get a home in LA. That's a market that I'm in. And even if it was like 400,000 or 500,000 needs work, they can get in on that deal, do the work themselves. And this way they're still customizing the home to their liking, right?
Exactly. That's it. I didn't even think about that point.
Yeah, they're not buying a fix and flip that's already been just kind of a lip gloss remodel, yes, lipstick remodel with there's just floor and paint, but they've actually put their own sweat equity into it too.
Yeah, and a lot of times now, because you are gonna have to permit everything, but at least it's being done correctly. Because a lot of these flips, they try to bypass those permits, and
Oh yeah,
now you're having to work with that on the appraised value.
yeah.
So that's another thing, for anyone, who's looking to get a home or taking out money. And I told my client this: if you're gonna, take out money to add another bathroom, he wants to add a bathroom, get it permitted, right? Because
Mhm.
when the appraisal comes, and reassessing that value, if it's not permitted, it's going to be an issue. So, but yeah, I think going back to
For it, you don't get the value for that second bathroom.
exactly.
The buyer sees a value, but the lender will not give that value. I mean, they consider it, but it's not, if it's not permitted, then it's not adding to the square footage of the home too.
Exactly. So definitely, guys, look into the FHA 203K loan, because especially I think when rates drop, at least I experienced it when rates dropped before, it's hard to get an FHA loan, through. It really is. You're competing against cash, conventional, and imagine you getting an FHA 203K loan through, and you're competing with, all cash buyers. So I think right now, if there's any time to try to get that through, is now.
Definitely.
Sure. Yeah.
Well, speaking of now, we got to wrap up here. Kind of abbreviated version today because we're all busy. I think that tells you the market is. If you're on
Yeah.
the fence hoping rates will somehow drive home prices down, I think you're in the wrong industry, wrong market for that happening. At least from where it looks today, we're all pretty busy. I know I am. I know Patricia is. And Shannon, I really appreciate you guys' time today sharing with families. Patricia, someone wants to get a hold of you and talk about what's available in the marketplace. Where's the best way to get in contact with you?
Or the new listing I have coming up in Southgate. That's a
Oh my
wonderful,
God, I'm
Wow,
exhausted.
my
Another new
goodness.
listing.
that's
Oh
a
my
wonderful,
God, not
yes,
another one.
wonderful opportunity for a first time buyer.
Nice.
It'll be on the market probably in another a week or so, probably by next week. And so I can be reached at 323-365-9909.
Shannon, the lender. Someone wants to find out about FHA 203K or other loan options. What's the best way to reach you?
Yeah, you can reach me. My number is 661-317-8484, or you can read me on Instagram at Fund with Shannon, and you can definitely reach out to me either, DM me or reach me via phone.
So his business page is Fund with Shannon, and his personal is Fun with Shannon. If you want some fun, give him a call. That's what I heard, at least. Okay, and I'm at Bill. That's not true, actually. There's no fun with Shannon, or who knows who that Shannon is? That could be somebody else, right? So we don't. Well, you have fun, but it's not your Instagram page. You know, for all we know, it's an inappropriate page, so I don't want you to go there. Fund with Shannon. Fun with Shannon is, we have no liability if you go there. But have fun with Shannon, but go to Fund with Shannon to get the paper. And I'm at Bill Gross Probate on social media. We do this every Wednesday, 4 o'clock, sometimes 5 o'clock. Appreciate having you reach out to us if we can help in any way. Have a great week. Thanks, everybody.
All right, thanks everybody. Bye bye.